It wasn't that long ago that notable short seller Jim Chanos said that data center REITs, particularly Digital Realty Trust and Equinix, were his next big short idea. He's a pretty successful short seller. He's notable for calling the Enron collapse years ago. So it's to be taken seriously. His general thesis was that big tech companies are going to start, developing their own data centers on wide scales and are essentially going to outcompete the data center REITs at their own game. I don't really buy it that much, to be honest with you, but there were some concerns in the data center REITs, particularly Digital Realty, which is one of my favorites and a stock that I've owned for a long time. So let's look at the results real quick of both of these and whether or not they're worth buying. So at first, Digital Realty's numbers might not look that great. Core FFO was down 2% year over year. Remember, that's the real estate version of earnings. And guidance was slightly lowered. However, that's a big part of the improvement the company's made. Digital Realty wanted to sell about $2 billion worth of assets at the beginning of the year. And it was kind of concerning. We thought they might get some really terrible valuations for the properties. They were trying to unload some of their core assets that we would like to see them keep. And long story short, the asset sales have been better than expected. The company sold a property that wasn't one of its core properties for $150 million in the second quarter at a 4.4% cap rate, which is very, very good. And it also raised a lot of money after the quarter by selling interests to partners in two of its big properties. So it sold a 65% interest in two Chicago data centers and an 80% interest in three properties in Northern Virginia. And combined, those two sales are going to bring in more than $2 billion in proceeds. And the best part is that Digital Realty gets to keep a stake in each property. This brought debt levels down after those two transactions are finalized. Digital Realty's debt to EBITDA ratio is expected to fall from 6.8 times to 6.3. So much, much better than it was before. And not only that, but the portion of debt that is floating rate, which is susceptible to higher interest rates, is expected to drop from 17% of the total to 6%. So the company's looking pretty good. They also have raised about $1 billion through stock sales, which I'm not a big fan of them selling stock at depressed valuations, but if it's fixing the balance sheet, which is one of my biggest concerns about the company, then I'm all for it. Leasing activity has been very strong. They're getting almost 7% re-leasing spreads on renewals. And so the companies, they reduced their guidance, as I mentioned. Their full year FFO guidance was reduced by about 1%. And that actually seems good when you consider that the data center portfolio is smaller and that they've raised $1 billion per share from $1 billion from stock sales, somewhat diluting shareholders. When you consider those two things, a 1% reduction in FFO sounds pretty good, considering that they fixed a lot of their problems. So I'm a big fan of this. Digital Realty trades for about 18 times FFO. With Equinix, by the way, the results were very similar. Revenue was up 11% year over year. FFO was up 9% year over year because they don't have the same debt issues as Digital Realty, but it's a much more expensive stock at about 24 times current year FFO. Digital Realty yields a little over 4% at the current level. Equinix is a little under 2%. Again, you get what you pay for. Equinix is a much more stable company. Digital Realty is in the middle of kind of a shift and a transition to fix its balance sheet and kind of right some wrongs that happened in the past few years. So I'm a big fan of both of these companies. I personally own Digital Realty. I see it as a great long-term bargain. The new management team that took over at the end of last year has been executing fantastically so far. The second quarter numbers were proof of that. So this is not a big short idea for me. This is one that I'm Digital Realty is one of my largest stock positions, and I plan to keep it that way. Am I right, wrong? What do you think? I'd love to hear your comments and thoughts, and I look forward to hearing them. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.